So hello everyone, welcome to the final webinar in our series for 2022. We're finishing off with a bang today with the Emerging Markets Impact Fund Showcase, where you'll be meeting the leaders of some of the most innovative gender and climate focused funds in the Asia Pacific region. My name is Heidi Lenfer and I'm a research analyst with the Ecotone Partners team. And as always, I want to acknowledge that I'm calling in from Darug country in the Blue Mountains. So I want to pay my respects to the traditional custodians of this land, the Darug people and their elders past and present. So if you've been following this series, you'll know that we've dedicated the last 4 webinars to exploring a range of different approaches that investors can take to embed climate and gender considerations into their investment decision-making process. And we've been really thrilled to be doing this work in partnership with the Department of Foreign Affairs and Trade, who over the last few years have been focusing their efforts behind both climate and gender lens priorities to help develop, de-risk and grow different aspects of the market in our neighbouring region. And just as DFAT has been working to catalyse more investment into the region to support development outcomes, at Ecotone, we are similarly focused on helping our investment community, so that's everyone on this call today, to really understand the power that we all have to use our capital to drive the change that we want to see happen in our lifetimes. So I'm excited to introduce you to the leaders of these 4 impact funds today. They're going to share their journey, present their investment strategies, and explain something of how they think about gender and climate impact. I also wanted to note for the record that today's session is not necessarily about pitching new investment opportunities. In fact, all of the funds that you'll hear from today have very particular requirements around who they can promote their investments to and how they offer their funds for investment. So the purpose of today's session is more to share with you a cross-section of the different opportunities that are already in market and to share how different fund managers think about investing for impact within the emerging market environment. So to lead the discussion for today's showcase, I'm going to hand over to the very capable hands of Rali Rizvanoli, someone who's built an impressive career at the really pointy end of impact. For those who don't know her, Rali is the Director of Investments for the Emerging Markets Impact Investment Fund, otherwise known as EMIF, which is a trust funded by the Australian government to provide capital through local partners to SMEs in Southeast Asia and the Pacific Islands. For the last 12 years, Rali has really had her boots on the ground in emerging markets, working with locally led teams who have huge potential to transform their own communities with a specific focus on bettering gender and climate outcomes. And before working with EMIF, Rali was a portfolio manager at Triple Jump, a Dutch impact-focused asset manager. And she started her career in microfinance and has held various positions at the Microfinance Information Exchange. And as if this career path wasn't keeping her busy enough, she's also fluent in 6 languages, including Bulgarian, Albanian, Spanish, and Dutch. So over to you, Rali.
Thank you, Heidi, for this glowing introduction. I am really thrilled to be here today and thank you all for joining. I'll be moderating this discussion with 3 very impressive fund managers, all of which are deploying innovative gender and climate impact strategies. Heidi, if you can pull the presentation, we'll do a brief introduction of who Sonia is, the investment manager of EMIF. We'll then jump straight into the presentations of the 3 fund managers, all of which are on EMIF's active pipeline. And we'll see a variety of strategies today across venture capital, private equity, and impact bonds. So Heidi, if you could skip to the next slide on Sonia, please. The next one. Great, thank you. So Sonia is a Canadian-based impact-focused asset manager with offices in Amsterdam and in Singapore, where I am based. And our vision is to scale impact investing in global emerging markets. And we do that, broadly speaking, by removing the barriers so many investors face when seeking to invest into emerging markets. And our core expertise is fund manager selection, We particularly focus on improving the ESG and impact policies of our fund partners, and with particular focus on gender and climate action. We have 12 years track record and multiple funds under management, as you can see on the slide. And one of them is the Emerging Markets Impact Investing Fund, which was launched in June 2020. So let's go to the next slide, please. So moving on to EMIF, as Heidi said, it's a trust fully owned by Australia's DFAT. It was conceived to make investments in funds that target small and medium businesses in South and Southeast Asia and the Pacific. We do that through investing in intermediaries, whether it be funds, it can be bond instruments, as we see today, it can be non-bank financial institutions. The strategy is fairly broad. It has a gender lens, and as well as one of its main objectives is to leverage and catalyze private investors into the assets we select. So for right now, for example, for our first 3 investments, we have co-invested with a number of private investors, including Australian ones. I think in the medium term, we are exploring a more scalable approach, one where perhaps we join in a vehicle with DFAT and Australian investors so that we jointly can invest in funds we select. So we'll be keen to explore this option with you in the coming months. So let's go to the next slides. So these are some of our results to date. We have made 3 fund investments, and we have demonstrated ability to deploy blended finance as well as support gender lens strategies. For example, EMIF was a first loss investor in its first fund. We invested $4 million and now the fund is oversubscribed at above 100 million. We are one of the first investors in a local venture capital fund in Vietnam. And most recently, you may have seen the AFR article. We invested alongside multiple Australia family offices into Sweep, which is a private equity fund leveraging gender diversity as a major value driver for its portfolio companies. And here on the side, you see one of the clients of a FinTech company, which was invested by Lendable, one of our fund investees. So now we're nearing the end of our pilot phase, and we're in the process of expanding the mandate, which will be broadened to also include climate funds. And as part of that, we have been building our pipeline of funds. And you see some of those representatives on the call today. So I'd like to present the first presenter today, Melissa Kang. She's a founding partner of JI Capital Partners. Melissa is a private equity veteran with decades of experience managing both direct and fund investments across Asia and emerging markets. And she's worked for institutional investors, amongst them Morgan Stanley and the IFC. And in 2018, Melissa set up her own Singapore-based fund management firm, JI Capital Partners, motivated by a desire to make more impactful investments in her region. So over to you, Melissa.
Thank you, Raleigh. Heidi, next, yeah. Hi, everyone. Good morning. I'm Melissa. Here, as Raleigh has mentioned, myself and a team of seasoned private equity investment professionals, as well as climate change operators, have come together 4 years ago to set up JI Capital. We all have a common belief that sustainability holds the key to the future success for Asia. So this is a slide with many points, but I think to make it very simple, when we came together, we are really looking at 5 R's. First, we are thinking about how to raise the bar for responsible investing in Asia. Here's the first 2 R's. We look at how to reduce greenhouse gas emission. That's something we care about, which we think is very critical and important, not just for the world, particularly for Southeast Asia, which is very vulnerable to the challenges of climate change. We also see the importance of improving resource efficiency. But ultimately, we are investors. We believe in order to continue to promote such type of investment styles and strategy, it is very important that all the investment we make generate superior financial return, which is like the R that most investors care about. So today we have a very strong partnership with a very large European investor, European Investment Bank, which is a pioneer and leader in the space of climate change mitigation investment and also sustainability. We are headquartered in Singapore, and we also have a team about 13 people with offices and presence in Indonesia, Vietnam, and also the Philippines. Last but not least, I also want to mention that we are a qualified gender investor. First of all, our firm is women-led. Majority shareholders are female, and 50% of our senior management team are women, and also about 50% of our investment pipeline are companies that are qualified as gender businesses. Next, Hayley. So our focus is really on Southeast Asia. Why is that? Southeast Asia is actually a very large region, and it's about 650 million people that is enjoying very strong GDP growth of between 4 to 9%. It is also benefiting from the global relocation of supply chain from China to Southeast Asia. The private equity ecosystem is also proven already in this part of the world. You could make investment, you could own asset, and you could exit properly with very clear tax structure that you could apply to that is very rewarding for investor. Our focus is mainly on the VIP market, which is the larger market of Indonesia, Vietnam, and the Philippines. Apart from the commercial opportunities and potential, these markets also present substantial challenges in terms of climate change. Heidi, the next slide, we will examine that. So you will see from this diagram that the two bars that is going up, these are the growth in the use of fossil fuel. So the GDP growth in the region has been primarily powered by fossil energy, which has a heavy carbon footprint. The bar that is going horizontal, there's renewable energy. Renewable energy, substantial capital has actually been channeled to this part of the world, but we see very flat. I think there are two fundamental reasons that cause this. First of all, unlike a region like Europe, where you have very strong integrated grid, in Southeast Asia, the grids are not integrated amongst the different countries. And also within the country, the grids are quite weak, and there are a lot of transmission losses. So as a result of that, even though many people channel capital and able to produce power generation, produce clean energy, we saw curtailment in green energy. The other more important factors is that Southeast Asia comprises of many islands, they are off-grid. So generating power, selling it to the grid to try to improve the source of energy does not really work. In fact, power generation only accounts for about 40% of global carbon footprint. The other sectors account for a lot more. For example, the food and agri sector alone is 30% of global carbon footprint. So we want to invest in our core strategy. Next slide, Heidi, which is what we call demand-side climate action. What does that mean? Demand-side climate action essentially is to control or invest into solution and technology that manage consumption of energy. So we look at how to invest in businesses that produce energy on site instead of selling to the grid, investing into technology-enabled, AI-enabled energy efficiency management to reduce consumption of energy, at the same time, also reduce costs, reduce carbon footprint. Southeast Asia is full of feedstock for alternative fuel like bioenergy. So this is also one area that could contribute to demand-side climate action. There are two other related sectors, circular economy and water, what you can recycle in waste to energy, what we can recycle, water, clean water, wastewater treatment, and also the new plastic economy. This is also an area that generates a lot of carbon footprint, but there are many solutions and businesses that have been emerged that provide very interesting outcome that can change the environment as well as generate very interesting financial result for investor. Last but not least, as I mentioned, actually, the food and agri sector account for 30%, but they are also closely correlated with circular economy. Many cases we see agri waste that can be used to generate power. And also we are looking into new technology in alternative proteins, different types of farming using better technology that can help to reduce the use of water, reduce the use of land, and obviously reduce the, what it emits in terms of greenhouse gas. The fund also have a minor allocation to invest in what we call digital platform that can contribute to a different way to deliver healthcare and education, or even informal transportation system or pollution management. this may not directly link to demand side or coin as climate change, but actually when you are able to provide online education in an effective and efficient way, you want already cut down a lot of traveling time, and cutting down traveling time will help to reduce carbon footprint as well. So this is essentially a summary of the different kind of interesting sectors that we look at. And if you have time, you can come back to me. You will find out that they are actually quite large markets with very high growth rate and large addressable markets, which we can discuss separately. Next slide. So what we are trying to achieve here, essentially for investor, is to build a portfolio of about 12 companies. They are well diversified across countries and also different subsector. Average investment is around 30 million based on our model. We are looking for entrepreneurs who have created businesses using disruptive technology or innovative solution to address a very critical issue of climate change challenges, energy, food, and also water demand, which is currently facing a lot of challenges. And these businesses must be able to demonstrate their ability to generate more than 30% top line growth over the next 10 years. And they are usually businesses that are owned and managed by a team of professionals, not family businesses. We want to invest in a significant minority stake of between 20 to 40%, where we apply typical private equity structure into such investment. However, we also include contractual obligation for this company to perform a high standard of ESG, environmental social governance standard, that will include cyber risk management as well as gender gap assessment. We will also measure the impact of each of these investments, which we will discuss a little bit more. So just based on this current slide, you will see that this is based on our actual deal pipeline. The deal pipeline would not only generate very interesting financial results for the fund, but it will also lead to avoidance of 50 metric tons of carbon emission, job creation, enabling women's employment, as well as the other types of beneficiaries and impact that can be generated. So I think this is the final slide of my presentation. I will stop here.
Great, thanks so much, Melissa. We'll have a chance to dive into a couple of deeper questions later. I do want to encourage the participants to use the Q&A box, and if you can indicate to which presenter your question is, we'll have time at the end to select some of those. Our second presenter is Sonia Kabir. She's the managing partner of SBK Tech Ventures. That is a Singapore domiciled fund manager with main focus in South Asia, in particular Bangladesh. Sonia has worked for several decades in the tech industry in Silicon Valley, including for the Dell and Microsoft, but decided to return to Bangladesh, driven by a motivation to bring back the knowledge and expertise she built in the United States, particularly from the tech industry, to her home country. She has made over the years a number of early stage investments in tech-enabled sectors in Bangladesh, and is now launching an institutional venture capital fund. What I find unique about the SBK team is that they're fully locally based and staffed primarily by Bangladeshi professionals. So there's a true element here of market building as Bangladesh is a frontier market. So over to you, Sonia.
Thank you very much, Raleigh. So firstly, I'll apologize. My voice may be a little bit hoarse, but I'll try to keep it as clear as possible. As Raleigh mentioned, we're a licensed VC fund. And what we focus is on funding startups that solve problems of the masses, and they create a transformative impact. And then on the left side, that's how we arrived at our logo. We did a lot of thinking. Solving problem of the masses is the ecosystem that you see, the red circle. Then digital is the technology, which empowers them to have better lives. And that's how we got our logo. So just to highlight from this page that we only fund startups that solve problems of masses and have a transformative impact. Next slide, please. A little bit about Bangladesh as a country. I lived 20 years in Silicon Valley, and I worked for the big giants like Oracle, Dell, Sun, and Microsoft. And, you know, at that time, the population of the world was 8 billion people, and 50% had internet. And I was selling only to the rich people who could afford to buy this high technology. There was the other part of the world, which included my country, 4 billion people who were not on the internet and whose lives could improve dramatically, because technology helps you scale if you can solve a problem efficiently. So the Bangladesh startup landscape is pretty nascent. We have 3 advantages. We have a demographic dividend. 50% of our population is under the age of 30. We have density dividend. 180 million people live in 55,000 square miles. And last but not least, from a pure tech perspective, we have data dividend. The consumption of data that can be used if we can solve problems of masses is huge, and that is what technology is about today. And I will not repeat what you can see on the slide already, just a few highlights here, that the number of active startups compared to any other country is actually very low. And we're a young country, we're 50 years old, but we are getting a lot of interest, and there's a lot of support from the government. They have an angle, a division called Startup Bangladesh, which has $65 million of funds to support people like us with follow-on funding. The fundraising leaders are startups are highlighted below, but basically till June, we've had about 90 million. And I think by the end of the year, we will have definitely more, but as we all know from June, with the global crisis, funding has stopped a bit. But if you see over the years, it's been growing for Bangladesh. And most importantly, the supply of students, we have 40 million students enrolled every year. The demand is very less for jobs because there are a number of institutions that are hiring. So what the startup ecosystem is doing is creating a lot of jobs, which is also help reducing poverty. So next slide, please. A little bit about us. I don't really want to spend too much time. Raleigh has also already mentioned that we have 40 companies in our portfolio. Some my colleagues might share know, like SoulShare. And then, you know, so we really focus on solving problems of masses where education is very big. And we feel that transportation, education, making everything digital, health tech, EduTech, FinTech is big focus for us. And from the ones that we've invested in, we've got follow-on rounds of 22 million from big name VCs. We definitely have IIX here, Natasha, so thank you for that. And we also see Sequoia leading a few of our big brands along with SOSV. So just to highlight that what we've seen are 2 things that I'd like to talk about, Bangladesh specifically, and then the region that I used to manage when I was in Microsoft, is that these countries are at a nascent stage and our startups are undervalued. Our founders are maybe not as sophisticated as getting a Harvard or a Stanford degree, but what they do is they live in the country, they understand what the problems are, they can articulate the unmet and the unarticulated problems faced by the masses of people who are not really educated, and they don't even realize that this is a problem. They think it's a way of life. So I think that if we can follow on that and invest on solving those problems for them, we will see a lot of transformation. Next slide, please. A little bit of a highlight on the kind of investments we've made in deal sourcing and trying to make people more aware, which I will talk a little bit later on, is we are very aligned with the SDGs, with my role at the United Nations Tech Bank. So we do focus a lot on seeing what are the important things that globally need to be solved and how our startups fit that portfolio. We've had a lot of work from Serona and EMIF in strengthening our policies for impact reporting and definitely ESG. And the startups we've picked are actually, a lot of them are solving problems of climate tech, or what we call green tech. And these examples are on the right, with renewable energy, emissions, travel, cashless economy, and definitely paperless. Next slide, please. Here we'd like to highlight our focus on gender, where me and my partner, Kerry, we're two partners in the fund, both female. Kerry also lives in Bangladesh, although she is an American. She worked for Brummer and Partners for 7 years, and now she's joined me as a partner in the VC fund. And we really try to promote women-led startups and we do a lot of activities, which I'll highlight later, but some of the numbers here are for you to look at, that out of the 40 startups, 33% are actually led or co-founded by women, representation in the board, shareholding, or in the founders. And female partners is completely 100%. Women in senior management is 50%. And we are also working closely with the EMIF again on strengthening the GLI impacts. Next slide, please. So what we realized that because we don't really have a robust startup ecosystem, we're a young country, really an emerging market with technology just coming up to speed with the rest of the world, that there's a lot of awareness that needs to be happening. People are not really aware of what a startup does, what is the difference between a startup and an SME, and also why women cannot be a part of the startup ecosystem. So we do have a lot of interest in two of the networks we've created. One is for women investors and the other is for women entrepreneurs, because what we're really trying to do is drive a momentum where women can empower women. And all of, it's very interesting to see how this started very casually with just our friends who are professionals with multinationals or telcos or in high positions in banks who have extra money and who would like to take a risk with us guiding them on women-led startups. So we've seen that average ticket size that these angel investments do are $50,000, and they only fund women tech-led startups. And this is where we also have that networking, where we invite all women, whether they are in our portfolio or not, because we realize that a lot of the problems that need to be solved have to be discussed, and we have to be collaborating and in order to share what the problem is. And then when there is a networking, we really see that there's a lot of new ideas that come up. And the last and the most important thing we do is, because we're betting on technology, because technology helps you scale for a country like 180 million people, you cannot solve for only 1 million. We have a CTO in residence who is based in Boston, and we have a tech team in India. We have our women tech entrepreneurs full access to these women tech CTO residents and the tech team. Next slide, please. This is just our pipeline building. What we talked about earlier was the gender, and this is for climate. We have two programs we run. One is the Net Positive Accelerator, and the other one is in partnership with Utopia and World Economic Forum, where it's called the Urban Innovation Challenge Bootcamp. We highlight what problems can be solved, and the awareness is most important, and then focus on what the themes can be picked. Next slide, please. So pretty much that's the end. And I'd like to say that gender and climate both are focus. And in a country like Bangladesh, $1 invested goes a long way. And just to leave you with one thought, that a country like Bangladesh, a startup begins with a valuation of $100,000. And in 2 years, it's very easily, we take them to 3 million when they go to an international accelerator, and we've taught them how to build a model, have an MVP, and go to market with their products. So thank you very much.
Thank you so much, Sonia. And I can attest, having been recently on the ground in Dhaka, the energy of the startup community. So thanks, Sonia, for sharing. Our last presenter is Natasha Garcha, Senior Director and Gender Lens Investment Specialist at the Impact Investment Exchange, IIX. IIX is a global sustainable finance firm with a mission to bridge the Wall Streets of the world with the back streets of underserved communities. Natasha previously worked on Wall Street, actually even during the 2008-9 financial crisis, and after that founded her own nonprofit, the Shades of Happiness Foundation, before joining IIX. At IIX, she has worked on its award-winning Women's Livelihood bond series, and those were the first gender bonds in the world, actually, to be listed on the stock exchange. And Natasha also represents IIX on the Orange Bond Initiative Steering Committee. And we'll hear a lot more about this initiative now. Natasha, over to you.
Thank you so much. It's so exciting to be part of this event. So big thank you to Ecotone and Sorona, and also my fellow speakers. It's been such a fantastic and timely conversation. We talk so much about women being disproportionately impacted by COVID, almost 1.8 times more likely to lose their jobs than men, disproportionately impacted by climate change. And even though they're not the main combatants of war, they are often the main victims. But I think what we're really finding also through everything that has been discussed today and everything that IX has seen, having been doing gender lens investing for over 13 years now, is really that women are not just victims of these issues, they can be solutions. If you have women at a peace table, agreements have a 35% chance of lasting more than 15 years. If you need to be able to solve the climate crisis with half of humanity as a part of the solution. And I think on the COVID side, we do see that $13 trillion can be added to global GDP if women are part of the recovery process and economic empowerment. And a lot of that is what we touch on through our Women's Livelihood Bond series and through the Orange Bond Initiative. So very happy to be here. If we go to the next slide, I think what I'll talk about first is really the Orange Bond Initiative itself. And so this is an umbrella initiative, just as you've seen with the Green Bond movement. Once there was a set of principles, there was I would say, a catalytic effect in the market of understanding what a green bond is, and therefore being able to invest in such securities and issue such bonds as well. So very similar to that, the Orange Bond Initiative's mission is to mobilize $10 billion by 2030 to advance gender equality worldwide. We have a big focus on low-income countries. We have a big commitment to making sure the Global South is part of the equation. Again, we're big supporters of the green and social bonds, but of course, those were mostly drafted by the Global North and mostly focused on being drafted in a very top-down approach. This is really trying to break that mold, embracing, even through our steering committee, you can see besides IAX, we have Nuveen, which is a $1 trillion asset manager on the steering committee. We have Australian DFAT, who's a true leader in the space, I have to say, in the gender lens investing market worldwide. The DFC as well from the United States. And then a number of other organizations from the private sector, Sherman and Sterling Law Firm, ANZ, Water.org, and UNCDF representing more of the civil society as well. And I think we really need that whole stakeholder approach, multi-stakeholder, multi-continent approach, if we're going to create a new standard for gender lens investing, which is what this is. If we go to the next slide, I'll touch a little bit on the whole goal is to really transition from strategy to action. I know $2 billion have been committed to gender lens investing, but the important word is that it has been committed, not deployed. There's been over 100 publications and articles on gender lens investing and about 3 different papers on what a gender bond could be or should be or might be. There's about 25 events that we've seen this year alone that focus on various elements of gender. But we see very limited input from the global south, even though so much of the world's population is here and so many of the gender-based discriminations we see, there's an edge that we bring, a cultural relativism, if you will. If you have people from a certain region who understand these issues, need to be part of solving them because they'll understand what the issues are on the ground and they can bring that expertise to solve them. And that's really what you've heard from Sonia and Melissa, as they're bringing their own edges to solve this in their markets. And that's what we really want to embrace the Orange Bond Initiative. Of the 800 sustainable debt transactions in the market and crossing $1 trillion in 2021, which is truly fantastic, but only 20 had a very clear gender lens, and that just needs to change. And so that's the big goal of the Orange Bond Initiative, is to have a concrete set of principles, standards, ecosystem support, verification support that goes beyond talking about the need for gender lens investing and actually making sure we're tapping into one of the largest markets in the world, which is the debt capital market system, and transitioning them to fill the gap that companies are now experiencing in the debt space, and to grow them with a very clear, very unapologetic gender lens. If we go to the next slide, I'll touch a little bit on how we're doing this at IAX. Our Women's Livelihood Bond series, as you heard, was the first in the world to be listed on a stock exchange, the first gender bond, if you will, to be listed on a stock exchange. Our next bond, the Women's Livelihood Bond 5, which was recently announced on Bloomberg, is expected to be issued later this quarter. It is an innovative blended finance structure where we fully understand the other side of innovation is risk. So we are introducing a 50% pari passu guarantee from AAA donors and a 10% sub-debt layer. It's a multi-country, multi-sector portfolio, and you've heard my counterparts on the panel speak about this. Is that this is one of the important diversification benefits you can bring through bonds like this. Is you don't have to. It's not a single corporate that's issuing it. It's really spread across a number of countries and regions and sectors. And we are aiming to empower 200 women and girls, hopefully a little bit higher than that, through the issuance. And I think one of the interesting things of the Orange Bond Initiative is that it doesn't just look for gender positive capital allocation, as we have, of course, done here. It also looks at making sure that the issuer embraces gender equality. So IX is women founded. We have women on the investment committee. More than 70% of the staff working on the transaction were women, and more than 90% were people from the global south, from the regions we're investing in. And so we, of course, comply with the Orange Bond principles, but we also comply with ICMA's sustainability bond guidelines, since we're both a social and a green bond compliance parts of our proceeds. We also comply with the UN SDG standards. So it's an exciting time to bring a transaction like this in the market when other debt investors are pulling out. If we go to the next slide, I'll touch just very briefly on one of the women who I had the great honor of meeting. And so this is a woman called Chow. She's from Cambodia. And this is one of the women who was part of an organization that we invested in through our second bond in this series. And I remember, for her, there was such a sense of dignity. This is not philanthropy. For her, she is using the loan to grow organic, sustainable rice. She is therefore contributing to higher income for her family, her daughter staying longer in school. She's contributing to food security for her nation, especially during the COVID-19 pandemic, where this was very critical. And in her view, she's also better equipping her community to adapt to climate change. Cambodia is very badly affected by climate change. And I think it was just such an empowering moment when you have the ability to hear from these women how they are part of the solution. I know we think we're helping them and we have a gender lens, but really they're helping us. They're the backbone of many of these economies that we are investing in. And so we're very proud through the Women's Livelihood Bond series that when we do our reporting, and hopefully later in the discussion, we can talk about all the greenwashing and impact washing that does happen in the space. One of the ways we mitigate that is by verifying our impact directly with women at the last mile through our IX Values platform, which is a digital impact measurement tool. It allows us to map, you don't have to go through the entire framework that's on the screen here, but a number of outputs into the number of women we're impacting through all these different sectors, from clean energy, sustainable ag, microfinance, and affordable housing, but also the outcomes. Are they increasing income? Do they have more ownership of assets? Do they have better access to market? Are they more productive, etc.? So it not only captures scale of impact, but also depth through these wonderful stories of resilience and empowerment. And before I wrap up on the last slide, let me talk a little bit about the importance of if we go to the next slide, of a blended finance structure. So we're really, all our bonds are issued through a special purpose vehicle whose sole goal is to channel capital to a multi-country, multi-sector portfolio. WB5 will, of course, be multi-continent as well, as we have entities from across South and Southeast Asia, but also some exposure to East Africa, which we're very excited about. Every loan is guaranteed by a development finance institution with a AAA rating, and there's a 10% subordinated debt layer. So as you can see, this allows us to balance risk, return, and impact in a market where it is very challenging to raise debt capital. We're still able to provide risk-adjusted and attractive returns for our investors because we have all these de-risking mechanisms in place and therefore do not have to compromise on the impact as well. And with that, I will hand it back to the moderator to take us forward. But it's been truly a joy to be a part of an initiative like this. And I thank you all for the opportunity for letting us speak more about it.
Thank you, Natasha. I'm so excited to see such kind of innovative products in the impact investing space. So we'll turn into a bit of a discussion now, again, encouraging you to use the Q&A chat box as well. So we're all very excited and hopeful about the opportunities that particularly the Southeast Asia and South Asia region hold. But today, the rest of the world is pretty grim realities with an energy crisis, geopolitical tensions, and public markets crashing. Naturally, investors are nervous how to build portfolios going forward. And does emerging markets hold a space as investors think about diversification? So I guess I'd like each of the participants to, from their perspective, to give their opinion why in this sort of turbulent times, it is still an attractive proposition to invest in emerging markets. Maybe Melissa, if I can start with you.
Sure, Raleigh. So I think when we first started JI Capital 4 years ago, we had not anticipated the pandemic. Neither had we, foreseen the ongoing Ukraine war happening and is affecting globally, right, in terms of causing energy crisis. However, what we saw was the risk exposure the world and also Southeast Asia facing in terms of food, energy, water, and challenges caused by climate change. So our business focus on companies that provide solutions to address this issue. For example, energy efficiency business using artificial intelligence and machine learning to create software that enable building to save energy. Not only you save costs today, you also save reduce carbon footprint. So businesses as such is just one example. These, to us, they are very essential businesses that are counter-cyclical. They're actually highly relevant in a time of turbulence like this. But these were businesses that we anticipated that you need already, even when the world was still enjoying very low interest rate. Another point is that the company that we are supporting, they are private businesses enjoying very fast growth rate in a macro that is also having very high GDP growth with strong population size and young demographic. These are very important factors that are needed to support any form of growth or return in investment, especially when we do not apply any kind of financial engineering into our investment structure. We really are investing in innovation, investing in growth, but we do not take risks like some other investors. For example, Sonia is able to support quite young companies. We are only supporting businesses that are proven with customers, with revenue, that our capital go in to scale that growth. So we see that this is the kind of investment that investors need to have in their portfolio, that they are long-term essential business. Emerging market is very relevant. Also, one of the challenges we face today is high interest rate, right? And interest rate is too high, company breach covenants that can translate into, for example, corporate failure. In those companies that we support, the revenue between the smaller one, about $3 to $4 million US, the bigger ones, about 30, 40 million. They do not really have debt, so to speak. They are not funded by debt. They're usually funded by internal cash flow and a lot of equity. So in that sense, I think as an investor, we are investing in developing countries and emerging market. We would, as a result of actually what has happened, as a general partner, we increased our commitment to the fund actually by 100%. So that attests to really what we think the opportunity means.
Thanks, Melissa. I think that the macro part of the story is quite interesting from what you mentioned, especially in an environment of pretty low or non-existent growth in developed markets. I think Southeast Asia still enjoys, low to lower digit growth prospects, as well as it's been relatively more insulated from the energy crisis and the inflationary pressures that I guess particularly Europe has been suffering of late. Maybe Sonia, to turn it over to you, Bangladesh, a frontier market, maybe not so well known to investors outside. What can you tell us about sort of the macroeconomic prospects of Bangladesh and how you see those kind of reflecting on your strategy?
Thanks, Raleigh. So one of the good things is, it doesn't sound good, but it is good, is that Bangladesh doesn't have a single unicorn as yet. So we're at a very nascent stage at the startup scene. And then that is why I had earlier mentioned that our startups are undervalued, and you get a very good deal when you come in. And so basically what's happening is, for us, the focus is a little bit on technology when we try to solve the problems of masses, because it helps scale. And from the technology perspective, the infrastructure has been developed, right? We have the device, which is affordable at $20. We have connectivity nationwide. And now it's just a matter of consumption, or offering a solution to a poor person in the village that he needs. So one example I can tell you that we worked on very successfully with a startup was a pilot with the government on digitizing land records on blockchain with a QR, because there's so much land grabbing that goes on in our country that no one can prove what they own. But once you have it on an indelible kind of system, anyone is willing to pay for that to protect themselves. So as we find a lot of these problems, the good thing is that Bangladesh is one of the fastest growing markets in our part of the region, and people have disposable income. We have microfinance borrowers who borrow at 30% interest rate, and their non-performing loan ratio is less than 5%, whereas we have these private banks giving 9% interest rate, and their NPL is 7 to 8%. So what this tells us, that the informal economy is really boosting the GDP. And if any startup can solve the problem of these people who are willing to pay and who have the ability to pay with technology, I think I'm very bullish on the future of the startups of Bangladesh.
Thanks, Sonia. Maybe just a question to Natasha. So I guess from Lisa and Sonia, we have heard about private strategies that does require, of course, investing in a fund with a bit of a longer term investor horizon. These funds typically are close-ended 10-year funds. The product, Natasha, you told us about is quite different. Can you tell us, just related to kind of the first question, why now, why emerging markets, but why a bond product in particular might be interesting for investors in this particular time?
Yeah, of course. I think it is very, that's a great question. Our bonds, there's a few things that make it interesting. So firstly, it's a 4-year bond, so it's got a very defined time frame. These bonds are listed on the Singapore Stock Exchange for credibility, transparency, but that means they also get listed on secondary exchanges like Market Access, which we hope when there's a critical mass of these kinds of gender bonds, that allows for liquidity. We also want to flag, which I think has been very important, is that when you have a bond, you have a predetermined portfolio. So when we go and we announce this on Bloomberg, as we did with WB5 a few weeks ago, investors who come to us and ask for the prospectus on the info memo can actually see who we're investing in. So you have a lot of visibility, you have a lot of ongoing credibility as well, being a part of a listed product. And I think that gives people a lot of comfort. But a lot of the comfort also of why emerging markets and why now is if you look at the Women's Livelihood bond series, which has been around since 2017, we've never had a default. We have 4 bonds out in the market as we speak. One bond was fully redeemed and matured in the summer of 2021 at the peak of COVID. Fully redeemed, no defaults, no need to call on our guarantee, even though, of course, we're very grateful for having the guarantee if ever required. And I think that's very powerful. It shows that there is a positive correlation between high impact and stable and secure risk and return. These are sectors that continue to be priority lending sectors like microfinance, affordable housing. These are sectors that are more resilient during even the global financial crisis. I was at a hedge fund and I saw our funds being gated, and it was catastrophic for all of us on Wall Street, but the microfinance industry was performing fine. And we're seeing that very similar with the high impact industry now. Clean energy, sustainable agriculture is still performing in a much more stable way because they are protected, because they're creating true value. And I think, going back to my story of the woman in Cambodia, the rice farmer Chow, for her, she's in a rural area. She's less exposed to a lot of the global supply chain risks, and including risks like COVID. So they were interestingly more resilient. They had some of the best years that they ever had. Through that firm during a time when the rest of the world was not doing very well. And I think the fact that we're able to verify that impact allows us, of course, to be very transparent and fight issues like green and impact washing and maybe orange washing in the future, I think it's also been a very powerful way to understand how our proceeds are being used and to make sure that we have a good sense of the risks and we can communicate that and manage that very effectively. So overall, I think this is a great time to look at emerging markets if you have the right products and the right fund managers who are able to take these things into account.
Raleigh, may I add a couple of points to this question? Also, first of all, even though the funds on venture capital and growth capital that we are managing are 8 to 10-year fund, actually the investors need to be aware that they are actually, funded by multiple capital call over a few years. So investors do not have to actually come up with all the capital on day one. The second one is actually, I really like to, learn from Natasha and share one example of our experience. So in 2020, we make an investment into a business that is what we call digital infrastructure that enabled the delivery of internet data to second, third, fourth tier city in Southeast Asia in a very efficient and cost efficient and reliable manner. The business has grown 8 times within 2 years, from 15 million to about $120 million in revenue, and is generating more than 20% EBITDA profit. So these are businesses that enjoy substantial tailwind in a very difficult environment, and at the same time enabling e-commerce to take place, online education to take place, and what a lot of activities that otherwise has to be done physically that involve traveling would enable because of this kind of infrastructure.
Yeah, great. No, thanks, Melissa. Great point. I think, yeah, one of the things that I did want to delve a little bit in is also that concept of blended finance that we spoke about. And blended finance can take many forms. It can be guarantees and first losses, but it can be technical assistance like IMIF is doing with particularly at SBK, but also with its future pipeline funds. We did hear from Natasha, from you, that you do have quite an interesting structure with guarantees and subordinated debt. Can you tell us more of sort of the real impact of such structures in enabling you to attract particularly private investors?
Yeah, no, thank you. That's an excellent question. And I think, it's a tough time in the market right now. Debt investors are pulling out, traditional debt investors. We also see foundations with PRIs are being very cautious now. We see folks who say they have an impact lens still asking about return. So this is a challenging environment to be in right now for anyone who's issuing any sort of bond, let alone if you also want to have an impact lens. And this is really where blended finance needs to be used so that you can balance risk, return, and impact in these challenging environments. And so bonds like the Women's Livelihood bond actually have to go in and go bigger in years like this when you see other forms of capital drying up. On the risk side, every loan has a 50% guarantee and then the first loss there. So case in point, if we have a $50 million bond, even if you would have to have more than 20% of the bond fails, so that's $10 million, 50% taken by the guarantee, 5 million, the remaining 5 million taken by the 10% first loss. So investors are made whole. I do caveat that, again, we've never had a default in the past, but it's still, it gives investors a lot of comfort, private sector investors, that these de-risking layers come from the development finance institutions that are our partners. But I really like the point you said on it can also be in the form of things like technical assistance. And I think that's very, very powerful. I know IMIF does a fantastic job with that. At IAX, for instance, we have to put in things like gender action plans to ensure that the impact is kept intact, especially the gender lens impact in line with the Orange Bond principles. So for instance, we'll look at a company that is doing, say, electric vehicles, an industry which does not traditionally touch gender in any way. Very few last mile delivery service agents are women in this industry. But if we want to make sure that women are part of the green workforce, we have to therefore invest in these companies and transition them to have more gender inclusion. So we'll have a gender action plan that will make sure it's safer. There are targets to hire women. We're looking at reasons why women may drop out, such as flexible work hours or tracking devices on the on the vehicles, and we'll make sure that that's part of the loan agreement. With your credit covenants, you also have impact covenants and a gender action plan. And I think that's been a very powerful way also to use blended finance, because we have these aligned targets with the development finance corporations who are de-risking this because they're looking to create this impact on the SDGs or through gender. So overall, it works well to balance the considerations.
Thanks, Natasha. I'm seeing that we're almost at time. If you do have any questions, please do drop them in the chat box. Maybe I have kind of one last question, and that's to Sonia, kind of building off of Natasha's point around gender action plan. So Sonia, I know that you have an intention with the VC fund you're launching to target a particular number of women tech entrepreneurs, but at the same time, you do mention it's a nascent ecosystem. So I'm curious if you can share some very concrete, from the ground examples of how you are working with these women tech entrepreneurs in Bangladesh and in Dhaka, and what you as an institutional investor can do, even with programs like technical assistance to support their growth.
So thank you for asking that, Raleigh. I didn't mention, but we do have an accelerator, and it's called Accelerate Her. Excel, it's spelled with an E, and where there are 6 startups who we incubate in our offices, and they have access to the tech team that we provide and the finance team that is with us. So their role is to solve the problem, and we help them brainstorm. And they've graduated. They started last year. All 6 graduated, and they were guaranteed funding from us, about 100K. And now 2 of them just closed last week. These are small amounts, like 200K and 300K. So what we're doing is we incubate them, and we really bring them and encourage them. And there's a sense of camaraderie when 6 CEOs sit together, and if one is feeling scared, the other can share. So this seems to have worked. And our next cohort, we've started inviting applications for the next cohort. So because from these 6, we would probably pick 1 or 2 as a cross investment as they grow. So that's what we do. We constantly work with universities. Anybody who wins a business competition and has an idea, we have an opening for 6 female startups every 6 months, every year, with full incubation in our office.
It's really great to hear. Heidi, I'll turn it over back to you for any concluding remarks.
Thanks so much, Raleigh. Look, I just want to say a massive thank you to everyone for being on the call today, giving over your time in the various time zones that you've been dialing in from. Really, really appreciate hearing about your wonderful work, and thank you in particular for doing that wonderful work. Also, a big thank you to DFAT. As I mentioned, this is the last of our series with them, and it's been so great to work with their team and really understand the nuances of the priorities that they have around gender and climate investing, and all the great projects that they've been leading for many years now. So thank you to everyone who's come along to the webinar series. Please feel free to share this. As I said, I will mention, as I mentioned, I'll share this recording to everyone that's registered, make it available for the next month. And I'll also put some contacts for all of the funds that were mentioned today, so you can pick up the conversations directly if you'd like to continue chatting. So thank you so much, and yeah, have a wonderful week. See you.
Thank you, everyone. Thank you.
Thank
Bye.
you.